Yo, what's up everyone? My name is Andrew Warren, and in today's video, we're going to be doing another transparency update with a portfolio. And as you can see so far, definitely a rough day for the stock market, at least for the stocks in my portfolio. Tesla is down around 5%. It has pretty much reversed every single bit of progress it had because of the Q2 earnings report reporting on profitability. Then we also had Microsoft drop significantly once again at minus 4.34%. And then we also have Apple stock dipping pretty hard as well at minus 4.42%. So pretty much every single stock in my portfolio that I've actually purchased for myself is down over 4% from the range of like 4 to 5%. So it's definitely a significant dip for today's stock market day, at least with the stocks within my portfolio. But this is consistent throughout a lot of the stocks and indexes on my watch list. You have VOO, which basically mirrors the S&P 500, just what the general stock market is doing. It's down 1.2%. NASDAQ is down 2%. Amazon is down 3.66%. Adobe's down 3%, Shopify's down 3%, Nvidia almost down 3%. Let's see, are there any other big movers for today? Square is down 4.78%. TQQQ down 8%, which is the triple leverage ETF. So definitely not the greatest day for the stock market. And by the way, if y'all do enjoy these daily videos where I just provide transparency on my portfolio, talk about how I'm feeling with the stock market, and of course my predictions for the future, then please make sure to smash that like button. It really does help me out, and it also helps my videos get recommended on YouTube with the algorithm, so it's much appreciated. But like I mentioned earlier, yes, a lot of the stocks in my portfolio are taking some pretty big hits today, but even the rest of the stocks in the stock market are taking hits. So far, neither the NASDAQ nor the S&P 500 ETFs are positive for today, so the general trend is downward. I haven't checked the Dow, but I'm assuming it's pretty much the same thing in the negative. It's only that the stocks that I've chosen right now are facing a bigger drop than some of the other options out here that are just down like 1 to 2%. But just looking at today so far, we lost 4.66% for the total portfolio, which is minus $5,240.81. And then for the after hours, currently I think we're just like 2 to 3 minutes in the after hours so far. It's like 403, 404, and we're currently up 0.09% or plus $94.62. So definitely not the greatest day so far when you combine both of these together. I'm not really sure what tomorrow's going to be looking like. As I always say, the after hours from 4 to 8 p.m. on the day of is not really representative of what's going to happen in the next day. But as you can see today, we started out the market hours in the pre-market at 9 a.m. at a point that was at plus 1.22% or plus $1,372.45. And then from that 9 a.m. up until 9:30, we finally hit this peak transitioning from the pre-market to the normal market hours. And at that point, it was the highest marker of the day, in which we were at plus 1.79% for the portfolio, which is around plus $2,017. And then from that point on, it dropped pretty significantly under the line into the negative until 10:15 a.m., in which we hit the minus 1.86% marker, which was minus $2,086. It jumped right back up at 10:50 a.m. and basically just touched the baseline at plus 0.10% or plus $111. Then we got a little bit of volatility right here. Hit this point at 11:50 at minus 0.68% or minus $770. And then we hit a few low points right here, bounced back up, and then bounced up again until 1:15, bounced down even further until we hit this low point right here at 2:15 p.m., which was over minus 5% at minus 5.26%. That's around almost minus $6,000. So huge loss at 2:15 p.m. It bounced back up just slightly a little bit at the end of the day. At 3:05, it was at minus 4.09%, bounced back down once again, curved up, and then finally hit this marker at 3:55 at minus 4.75%. And then we entered the after hours where it bumped up just the slightest bit. So like I said earlier, definitely not the greatest day for us. But I always try to emphasize in these videos not to stress over the day-to-day movements too much. I like to break down the movements in the day just for the sake of talking about it and discussing the market and what happens in various time periods throughout the day, just because it's interesting to analyze that. and sort of compare days like these to really bullish days like we had yesterday, and then of course those really weird days where it's either super volatile or consistently high across or consistently low across. So it's kind of cool to just compare what happened based on the various time frames throughout the day and each day in comparison as well. But I always try to emphasize it doesn't really matter in terms of the day-to-day movements. What really matters is just the long-term trends. And in the long term, I think all of the stocks that I own currently are going to go up significantly in the future. And as we know with compound interest, it's only just going to grow more and more as the portfolio grows as well. So that's like, for example, Amazon was like $500 a share just a few years ago. And a 1% movement for that is, it's nothing special. That's up like $5 in one day. But now that you have Amazon over time as it has grown, and of course with compound interest as well, you have Amazon at like a $3,000 price tag. So when you have that 1% at $3,000, that's like a much bigger movement for a smaller percentage. So that would be like plus $30 instead of plus $5. So as time goes on, the share prices get larger, and the 1% movements that were maybe not as much many years ago are going to be much bigger movements in the future as these shares gain more value. But just addressing the portfolio, that's one of the things that you really have to have in terms of just like a mindset. You have to view these red days as nothing other than an opportunity. And if it's not an opportunity to you to buy, if you don't have the cash on the sidelines, just think of it in the future. If you did have the cash, that would be an opportunity day. That's how you take an offensive approach to investing on the days that you can't really do much other than watch the chart go down in the red and then maybe buy as well. And buying is really what combats those red days because it can help lower your cost basis on shares that you think will grow in value in the future. So you look at the green days and take them with stride and be happy about them and celebrate them. But one of the major things people could learn is to not get so upset over the red days because it's just a part of the market. As we know, ETFs like VOO only gain about 10% per year. So think about that. Let's say we cut out the weekends. Let's say like 300 days per year the stock market is going on. That's 300 days of either up or down. And considering that the average is around 10% for VOO, I mean, it has to go up a lot. It has to go down a lot. So when you really look at that in terms of just what it gains in average, you have to realize there's going to be a lot more up and down that eventually corrects it to that average of 10%, to where with that, you just need to realize that the up and downs are just part of the stock market. And that's one of the main reasons that people emphasize not trying to time the market, because it's really difficult to time in on the perfect prices when you have no idea what the stock is going to do in the future, and especially what it's going to do in the long term as well. You can get more of an idea with long term and have better accurate predictions in the long term, in my opinion. When you're thinking about stocks like Microsoft and Apple and Tesla, you can pretty much say, I expect this stock to grow in value in the next 30 years especially, but it's a lot more difficult to predict in the short term where a stock is going to end up. And especially like just in the next upcoming week, it would be impossible for me to tell you all accurately with knowledge, just judging from what has happened previously, what will happen on each day of this next week. You just don't know because you don't know how people are going to react to the next upcoming days. So in my opinion, it is really crucial to try to separate your emotions from the stock market, because when you're able to do that, you don't have to worry about all of the useless stress that happens when you're constantly worried about the up and down movements. If you can get over that, I think that's when you really enter the next level of investing, when you're not stressing about investments every single day. Because if you're stressing about investments, then that means it might be likely that you'll panic sell in a time where there is opportunity. That's why Warren Buffett says, be fearful when others are greedy and be greedy when others are fearful. And with that be greedy when others are fearful part, that's usually when many opportunities are found, when people around you are fearful about investing and thinking that, oh, maybe this is probably not the best time to buy because something bad is going to happen soon, or I think it's just going to go down even more after this just recent crash or something like that. And with that quote, Warren Buffett emphasizes taking advantage of those moments in time where the major mindset with the majority of people is they are fearful for the future. And that is really where opportunities are found for people that have money on the sidelines and are looking for these opportunities to gain wealth in the future. And that's how you can really grow your wealth significantly, when you're able to find these opportunities and invest accordingly. So with all of that being said, let's go ahead and check out the numbers for today. As I said earlier, Tesla is now down a little over 5%. It's dropped even more in the after hours. I'm honestly not surprised, especially after after an earnings report release. You have some people that decide that it's better to sell off before the report. You have others that hear about the success and cash out based off of that good news. And then you have people like me that are just sitting here waiting for the long term and waiting until the volatility clears out and the pullback clears out until it starts to gradually grow once again, which I think will happen in the future. So like I said, what we're really seeing here is a lot of people just taking profits. Honestly, there's nothing wrong with taking profits. You can't really shame someone for taking a gain, but it really doesn't bother me that the stock is back down to $1,500. It's just part of the game, and that's how it goes with the stock market. A lot of the times the stock market will tease you where it'll show you some really nice profits and then it'll take it back, and then you end up having to wait like another 3 or 4 months just to get those profits that you had already gotten to. So, I mean, we can even see this if we look on the 1 month chart. We had an awesome day on July 13th. It went all the way up to 1765 and then pulled back down to what it was at the earlier part of the day at the end of the day. So we lost every single bit of that progress. Still haven't got back up to that point, and that's what I'm talking about. That was like 2 weeks ago or a week ago. Today's July 13th, so I guess like a week ago. So keep in mind that the stock market will tease you sometimes, and especially when it's volatile stocks like Tesla, there's going to be some pullbacks, there's going to be some high points, but I eventually think that it will greatly pass this marker in the future. It's just a matter of time, and as people get more comfortable and more money coming off the sidelines to put back into Tesla. So even if this stock price dropped down to $900, I wouldn't panic sell. I wouldn't be worried whatsoever. I would just look at that as an opportunity like I mentioned earlier. The red days are opportunities. So just addressing everything, for today's return, we are at minus 5.17%, and that is minus $2,832.93. Then for the total return, we are at plus 78.18%, or plus $22,797.01. So really awesome gains with Tesla so far. It takes up 48.54% of my portfolio currently, and I own 34.409 shares. And moving on to the next one, we have Microsoft. And this one was one that really had some positive earnings reports. It beat earnings, as you can see. So really solid news came out on Microsoft. However, it still dipped significantly based on that. With the more normal stocks like Microsoft, where you can expect a profit and pretty much expect that out of them every single quarter almost, people like to buy the stock maybe, let's say, like a quarter early and get some of those profits in between that quarter and then sell off before the announcement, because they know that they will likely announce positive news. And usually with positive news, sometimes people do like to take profits and sell off. Those are for the short-term people. I don't like that because I'm a long-term investor, but that's really what's happening right now. We're seeing this sell off with some positive news, and that's just a part of investing. That's how it goes. People like to take profits every now and then, so it's nothing to like panic over, in my opinion. This is a long-term game for me, so I'm going to be in it for the long term with Microsoft, Tesla, and Apple. So just addressing today's return, we are at minus 4.39%, or minus $1,813. And for the total return, we are at plus 18.12%, or plus $6,057.03. I currently own 195 shares, which is a portfolio diversity value of 36.80%. And then finally, we have Apple stock, which is currently at $370 per share right now. I lost 4.69% for today, or minus $766.92. And then for the total return, we are at plus 29.68%, or plus $3,564.78. And this one only takes up a measly 14.52% of my portfolio at 42 shares. And then finally, just for the fun of it, we have this free stock. For some reason, this one has been doing really well recently. I actually have 2 of these right now. And, 4 cents gain today. I'll take it. But anyways, I just want to share this transparency update with you all so far and just my mindset going into things. If you enjoyed this video, please make sure to smash that like button, and also feel free to sign up to Robinhood and Webull in the description below. If you sign up with those links, then you can get up to 60 free stocks on Webull right now and 1 free stock on Robinhood. You can get 1 for free on Webull just by signing up with my referral link, and then depending on how much you deposit into Webull, you can get up to 60 free stocks. I believe if you deposit $5,000 into Webull right now, you get 10 free stocks in addition to signing up with my referral code, which is another free stock. So definitely check out Webull right now, because they have a huge promotion where depending on how much you deposit, you can get a significant amount of free stocks. But anyways, hope you all enjoyed this video, and I hope you have a fantastic rest of your week.